Most people think that you need a big down payment to buy a big house in 2025. Well, there are strategies to where you can have a jumbo loan and only put 5% down. But that's not the only thing you need to know if you're thinking about getting a jumbo loan this year, because jumbo loans are very different from traditional loans. So in this video, I'm going to talk about what a jumbo loan is, what the credit score requirements are, what the reserve requirements are, and all the different things that you need to know before you go out and look for a home. So first thing we need to talk about is, what is a jumbo loan? Well, before that, we need to define what is a conventional loan. So a conventional loan is what you might think of. You probably heard of Fannie Mae and Freddie Mac. These are loans that are backed by the government, and they have semi-looser guidelines. It's easier to get approved. There's typically less down payment required, etc. But they have a maximum loan amount. Each year, that maximum loan amount typically goes up, and in 2025, it's $806,500 in most parts of the country. Now, if you are in a higher cost area, California, places like that, it could be higher, and probably is. But the fact is, once you go over that loan amount, over $806,500, then these loans they don't have any sort of implicit government backing. So that means that the requirements are going to be stricter. You're going to have higher credit score requirements, higher reserve requirements, etc. So I'll explain all of that. So the first thing we need to talk about is credit score requirements. You're going to need typically at least a 680 credit score to get a jumbo loan. Now, I do want to mention all the loans I'm talking about in this video are assuming that you're fully documenting your income. In other words, 2 years of tax returns, paycheck stubs, all that stuff. If you are in a situation where, let's say, for example, you're self-employed, you can't document all your income traditionally, in other words, maybe you have too many write-offs, then you want to check out one of my other videos about alternative documentation loans, like bank statement loans, or we even have loans that don't require any income at all, just a larger down payment. So anyway, check out those. But in this case, again, I'm talking about people that are fully documented. So a debt to income ratio is very basically the percentage of your before tax income that goes towards all debt that appears on your credit report plus the new mortgage payment. And when we look at a credit report, it doesn't matter what the balances, say, on your credit cards are. It matters what the minimum payment is that shows up. Or it doesn't matter what the payoff on your car loan is. It matters what the monthly payment is. So that's what we're looking at. Typically, it's going to be 43% up to potentially 49%. Also, you got to look at down payment percentage requirements. Now, there are investors, there are banks that will do a jumbo loan with as little as 10% down. Now, after this, I'm going to talk about a strategy where you can just put 5% down in certain situations. But in general, you can put 10% down. And to get the best rates, there's going to be certain loan limit requirements. Typically, you can go up to about $1.5 million and put 10% down. Now, again, the less you put down, typically the higher interest rate, but it's definitely possible. You also, if you are okay to have a slightly worse interest rate, maybe you'll have slightly looser requirements, you can even go up to a $3 million loan amount and put 10% down. Most people don't do that because the rate's going to be sort of high, but it is possible. Again, for the best rates to put 20% down, you're going to be able to borrow up to about $2 million. And if you're okay again with higher interest rate, you can put 20% down and go up to $5 million. And if you need a loan up to, say, $3 million or more, you're probably going to have to put at least 30% down and for better rates, 35 or 40% down. So those are the general things. Another thing to keep in mind with jumbo loans is reserve requirements. So reserves are very simply the number of months of mortgage payments that you have left over after closing. Now that could be in a bank account, could be in stocks, a retirement account, anything like that. But the bank wants to see that you have money to make, X number of mortgage payments. That's going to be a minimum typically of 6 months, usually closer to 9 or 12 months. And of course, the higher the loan amount, even more, maybe up to 18 months. So in general, you're going to have a lot of assets left over after closing. All these jumbo loans are available for, primary residence or a second home or even investment property. But for second homes and investment properties, they're going to have bigger or larger down payment, requirements. And if that's something you need to talk about, any of these, obviously you can reach out to me anytime. You get on my website, mortgagesbyscott.com, or just put a note in the comments below, and I'll get back to you. But I did want to talk about a strategy where, if you want to say buy about $1 million home, a really good way to do that, if you're a little short on funds, is to combine a conventional loan, $806,500, with a home equity line of credit. So you are allowed with a conventional loan to put down as little as 5%, and if you're a first-time home buyer, as little as 3%. But again, you're capped at that loan amount. Well, what we can do is get, say, for example, a $250,000 home equity line of credit, combine it with the $806,500 conventional mortgage, and now you're able to get into that home with very little down payment. And you're able to take advantage of the lower reserve requirements. Sometimes a conventional loan won't require any reserves, or maybe 2 months of reserves. And the home equity line of credit is typically, you're qualified off of the interest-only payment on that portion. Now, of course, you want to try and make more than an interest-only payment, but this is a way, again, to where if your income's a little short, maybe you're a younger borrower, you're trying to get into a house with minimum down payment, that is a great way to do it. So these are some general guidelines, tips and tricks, things you need to know about getting a jumbo mortgage in 2025. Everybody's situation is different. Again, if you need to talk about any situation like this, have questions about any of these points I went over, or again, if you're self-employed and need to talk about alternative income documentation, please reach out to me. If you found this video helpful, it'd be super helpful to me if you would share it. Click like and subscribe, and again, reach out to me on my website, mortgagesbyscott.com, with any questions. Thanks.